We hate the word taxes. It gives us a headache and dizziness. Taxes make us poor. I wish everyone would pay taxes except me. We need taxes, otherwise we have no schools and roads and police. I understand we need to have taxes. I just wish someone else paid them. What you need to know about taxes is that the effective tax rate is never the same as the official rate. You almost always have an extra deduction or addition to your tax bill. Now, even if your effective tax rate is the same as the official rate, it almost never is that you pay all of it at the end of the fiscal year. Sometimes you pay it in advance, and we call that a deferred tax asset, or we pay it later, and we call it a deferred tax liability. Just like suppliers, where we sometimes pay in advance and register a prepaid asset, or pay later and call it an accounts payable. We have the same in taxation, either earlier or later. Let us look at an example where the tax expense and the payment of that expense are not at the same time. Imagine a company pays you $100 today and you will ship the good next year. When you get the cash, you need to pay taxes. So you have a tax bill of $20 today. When you ship the good next year, you do not pay the taxes again because they are already paid. Now in financial accounting, when you receive the cash, you do not register revenues or tax expenses. You simply have a cash increase and the corresponding liability. However, you also pay taxes for tax expenses that take place next year. So you recognize a deferred tax asset. Next year, when you ship the good, you recognize the revenues and tax expenses. But this time, when you recognize the tax expense, you do not pay it because it was already paid last year. You simply eliminate the deferred tax asset. In other words, if you have a tax expense today, it does not mean you pay the tax expense today also. When you pay the tax expense depends on the tax rules. Just like when you sell today, you recognize revenues and income. But it does not mean that we receive the cash today. Taxes are the same logic. Having revenues and tax expenses does not mean that we pay the tax today. Let me make another example. Assume you have employees working for you this year and having wages expense. If you do not pay them yet, they are still an expense on the income statement. However, for tax purposes, you cannot deduct the wages expense in the tax filings because you have not paid the wages in cash yet. You have to understand, tax authorities use a simple cash in and cash out mentality. They mostly follow the cash. If you pay the wages, you get a tax deduction. If you do not pay the wages, then you do not get a tax deduction. So under the tax filing, we do not recognize any cash expenses. Now, next year, when we pay the wages, we can put them under the tax filing as a cash expense. On the financial statements, we put the wages expense even if we do not pay for them, and we lower our tax expense. Please note that we have a tax expense of 8, but we are paying 20 on the tax filing. We are overpaying by 12 and creating a deferred tax asset. Next year, we have revenues of 200 and get a tax expense of 40 at a rate of 20%. How much taxes do we pay? We pay only 28. The difference of 12 is simply we pay less because we had a deferred tax asset from last year. Complex stuff. Hope you're being able to follow. This is not easy. And this is why I keep taxes to the very end. Hopefully you understand accounting logic very well by now to be able to follow. If you do not do these numbers on the side, it will be hard to follow what I'm trying to explain. I am confused myself with taxes. I just pretend I know what I'm talking about. I don't. So do not be too harsh on yourself if you're completely lost.